All right, welcome to The Explainer. Let's talk about cryptocurrency. I mean, you hear this word everywhere, right? But how does it actually work? Well, we're going to break down the tech that people say is changing the world, one block at a time.
Yeah, you've seen the headlines, heard the buzzwords. Bitcoin, blockchain, NFTs. It can all feel a little overwhelming, to say the least. But here's the thing. To really, truly understand what's going on, we got to take a step back. We need to look at the story of money itself. So, to figure out why crypto could be the future, we first have to look at the past. I mean, the way we've traded stuff, it's been changing for thousands of years. And believe it or not, we are right in the middle of another huge shift.
Okay, so you can really break it down into 5 big stages. First, you had bartering, right? Trading your cat for a horse, not super efficient. Then came stage 2, shiny precious coins, something you could hold that had actual value. Stage 3, paper money. This was a big leap. It's just a promise from a government, really. And that brought us to where most of us are now, stage 4, digital banking. Our money? It's just a number on a bank's spreadsheet. You see the pattern here? Each step got a little more abstract, but also way more convenient.
And that brings us to this potential 5th stage, cryptocurrency. This is like the final form of abstraction. There's no gold, there's no paper, it's just the purely digital transfer of an asset from me to you.
So, what is a cryptocurrency really, at its core? How does this whole thing even work if there's no bank in the middle keeping score?
You know, the easiest way to get your head around it is to just picture one giant shared spreadsheet. Seriously, it's a spreadsheet that just records every single transaction for everyone to see, who paid what and to whom. That's it. That's the big idea.
And this giant spreadsheet, it has a name. It's called a ledger. Now, think about it. Normally, your bank has its records, the coffee shop's bank has its records, they're all separate and private. With crypto, there's just one public ledger for that currency, for everybody. And that one simple change, it has some really powerful advantages.
This brings us to the most important idea of all, decentralization. It's a total game changer. We go from trusting one single bank to trusting a transparent system. Instead of one private copy of that spreadsheet, there are literally thousands of copies, all held on computers all around the world by volunteers we call miners. What does that mean? It means no single bank, no government, no company is in control. All you need to be part of it is internet connection.
Okay, but wait a second. You might be thinking, if anyone can have a copy of this spreadsheet, what's to stop me from just, adding a few zeros to my own account? Great question. How is this whole thing kept secure and trustworthy?
Well, the answer lies in something you've probably heard of, the blockchain. And let's get one thing straight right now, because it's super important. Blockchain is not the currency. It's the technology behind the currency. Think of it like the internet. The internet isn't Google, it's the thing Google runs on. Well, blockchain is the technology that currencies like Bitcoin run on. Its whole job is to keep that giant spreadsheet secure.
So how does it work? It's basically a 3-step dance. Step 1, a bunch of transactions get grouped together into a block. Step 2, that block gets sealed with a super unique code called a hash. You can think of it like a digital fingerprint. It's totally unique to the data inside that block. Now step 3, and this is the magic part, each new block also includes the fingerprint, the hash, of the block that came before it. And that's how they're all linked together, creating you guessed it, a chain.
And this is what makes it so incredibly secure. Let's say a hacker tries to go back and change just one tiny detail in an old block. The second they do that, its digital fingerprint, that hash, it changes completely. And since the next block has the old fingerprint baked into it, the chain breaks. It sets off this massive, visible alarm for the whole network. The fraud is instantly obvious to absolutely everyone. So, for someone to actually pull off a hack, my gosh, they wouldn't just have to change one block and fix the entire chain after it. No, they would have to do all of that on at least half of all the computers on the network. We're talking maybe 500,000 machines, all at the exact same time. It's pretty much impossible. And that's where the trust comes from, not from a bank, but from the math. All right, so now we know how it works and we know it's super secure. But what does this all mean for the real world? Let's try to separate the hype from the reality and really dig into the pros and the cons. And man, the debate around crypto is fierce. On the one hand, the promise is absolutely massive. I mean, finance without banks, instant international payments with super low fees, financial access for anyone on Earth with an internet connection? Wow.
But on the other hand, the reality today is pretty complicated. The prices go up and down like a roller coaster, you can't exactly buy your groceries with it, and yeah, there are some pretty big environmental concerns about all that mining.
You know, let's tackle one of the biggest myths you always hear, that crypto is just for criminals. The data just doesn't back that up. Why? Well, because every single transaction is public on that ledger. It's not actually anonymous, it's traceable. In fact, good old-fashioned cash is used for shady stuff way more often, precisely because it doesn't leave a digital trail.
Okay, so beyond all this serious financial talk, crypto has also kicked off this just truly weird and wonderful internet culture. It's really not just about money anymore.
Let's dive into NFTs, non-fungible tokens. Okay, fungible is just a fancy word for interchangeable. A dollar bill is fungible. You can swap it for any other dollar bill. But something non-fungible is one of a kind. It's unique. So an NFT is basically just a digital certificate of ownership recorded on the blockchain that says you own this specific digital thing. It could be a piece of art, a video clip, whatever. Sure, anyone can right-click and save the image, but the blockchain proves that only one person owns the original.
And this whole idea has led to a pretty wild market. For example, the founder of Twitter, Jack Dorsey, he sold his very first tweet as an NFT for $2.9 million. Yeah, for 5 words.
And if you think that's crazy, get this. An NFT of a digital collage, basically a single JPEG file, sold at a famous auction house for an absolutely staggering $69 million. What does the buyer get? Digital bragging rights, pretty much.
And then you have the meme coins. Take Dogecoin. It was literally, and I mean literally, created as a joke based on a dog meme. But people started sharing it and buying it just for fun. And that fun propelled its value so high that some of the early buyers actually became millionaires. It's just a wild example of how internet culture can create very real value out of thin air.
So when you boil it all down, cryptocurrency is really a story with two sides, isn't it? On one hand, it's a serious technological revolution that could totally reshape how we think about finance. But on the other, it's this bizarre, wild cultural moment, driven by hype, memes, and the internet. And that leaves us with the big question. Is this the next logical step in the evolution of money? Or is it just a fascinating, high-stakes digital gamble? I guess for now, only time will tell.